Hey, what's up guys, Michael here. In today's video I will be talking about a new strategy that I came across on the internet, and I decided to make a video on it because it looks very good. The potential risk-reward ratio looks very good. The conditions are very straightforward and very simple. Let's without further ado, let's go straight into the chart and let's talk about what are the ingredients and what is it about all the fuzz. Let's switch the chart. This is the JBP/USD daily time frame chart, and I'm explaining all the ingredients because you can see that there are various moving averages and some ADX down below, but it doesn't look as usual. So first ingredient is the 200 simple moving average, and it is because we need to we need to know the direction of the overall trend, and we need to know where to take particular trades, because it will serve for us as usual for the purpose to filter either we should go and take a buy trade or go and take a short trade, a sell trade. So yeah, but you can see there are three of them. Basically, there are three calculations. The first one is the simple moving average. It is with the simplest calculation, it is based on high plus low plus close divided by 3, and the other two are just calculated by the highs, and this one is calculated by the lows. So basically that's the first filter. And the second filter is the exponential moving average, and it is a 10-period moving average, and also three exponential moving averages with a 10-period, and basically it is the same for with the previous one. The first one is a high plus low plus close divided by 3. And this one is calculated by the highs, this one is calculated by the lows, and all three are 10-period moving averages, exponential ones. As you can see on the left side, you have all the calculations explained, and this short period moving average will help us to determine the entry and exit levels, but it is not the typical moving average strategy where we are waiting for the crossovers. It's not that one. Because as you know, the moving averages are lagging indicators, and they are far behind the current price movement. Therefore, this is something different. And down below you have the ADX indicator, which if you watched the previous videos, you know that the ADX indicator measures the trend strength. And basically I removed the other two lines, the plus dy and minus dy, because to determine the direction we are using the moving averages, so they are not necessary for us. And I marked the period, the 30 level and the 60 level, because the 30 level, it signals us that the trend is gaining strength. Basically everything below 30 level we are not trading, because there is not enough strength in the trend to push the price in some direction. And above 60 level, it means that the trend is currently overheated, and soon it will be losing strength, losing momentum. Therefore, it is also some kind of a signal for us to watch out when we will receive a signal in those areas. Okay, now let's talk about the entry and exit conditions, and they are as follows. The 200-period moving averages, as you probably guessed, it is the filter for us to determine either we are taking long trades or short trades. So if the price is above the 200-period moving average, we are only considering long trades, and when it is below the 200-period moving average, we are only considering short trades. So that's the first filter. Second filter is the 10-period exponential moving averages. So when we have the price closed below the 200-period moving averages and simple moving averages, and the price also closed below, outside, we can say, this 10-period moving average zone, which would be in this situation this candle, because this is the first candle which broke through the 200 period moving averages, and it is also below the 10 period moving averages. So that is our second filter. And the third filter is the ADX indicator. So basically, if the ADX is above a 30 level, that signals for us that the trend is in proper strength, and this would be our entry level, right? So maybe let's mark the candle here, mark with the horizontal line. That would be our entry level, right? So sorry, here. That would be our entry level. And the stop loss is more or less our take profit. So firstly, it is based on the, in this situation, because this is a short trade example, it is based on the 10 period exponential moving averages calculated from the highs, which would be over here. If the trade would go in the opposite direction, let's mark it with a different color, maybe with the red one. So if we would, if the price would turn back, that would be our stop loss level. But when it is going down, our take profit is also based on the same principles. So if the price went down and then closed above the 10 period moving averages calculated from the highs, that would be our take profit level, which would be in this example this candle which closed. Maybe let's zoom in a little bit more, which closed above 10 period moving averages. So here we would close the trade. Go rectangle. So yeah, basically these are the principles of this trading strategy. So maybe let's check some other examples as well. Maybe let's check this one, because this would be also an example that this strategy doesn't work always. So we have the situation like we have it here. So the price closed below the 10 period moving averages zone, we can say, and the ADX is above 30, so that would be our entry level, all right? And we would open a short position, therefore our stop loss would be when the candle closes above the 10 period moving averages, right? So we would be stopped out over here. With this candle. You need to have that in mind, that it is not a holy grail as everything else. As you can see, this strategy is not a holy grail, but it is very simple to use. It is based on a couple of the indicators, and the rules are very straightforward and yeah, easy to follow. So maybe let's check some long example. So we need to look for the chart when the price is above 200 EMA. So that would be the first one. And as you can see, we would enter here because the price closed above 200 period EMA, and it also closed above the 10 period EMA. The ADX is above 30 line. Therefore, that would be our entry level, and we would be stopped out over here. So that would be not a good trade. This one, as you can see, we would be, yeah, stopped out at this level. So let's delete this one and look further. We have another example over here. Yes, it would be here, our entry level. We closed above 10 period moving averages. And this one would be not that great of a profit, because we would close right over here. Okay, let's go further down the line. We could open here, I think in No, we couldn't because ADX is down below, but we could open over here, and this one, as you can see, would be also not profitable one. So, but let's mark it either way. So this would be our entry. So I'll be marking it. As you can see, entries are with the green, exits are with the red. Okay, this one would be not profitable. But this one would be. Okay, but let's delete the lines because they are made a mess. Okay, so here you have further down the line another example. We are entering here. The price is above 10 period closed above 10 period EMAs, and it is above 200 period EMA. It is the ADX is above 30. So this would be our entry level, and where we are exiting right over here, where we closed below the 10 period moving averages. Come on, let's go red. So as you can see, these are the examples of the particular trades. Maybe let's check, because this is a daily time frame. Let's see, this one would yield us 235 pips, for example. So as you can see, this strategy is not perfect, but it has a good risk-reward ratio. In the previous example, you saw that the stop loss levels were not far from our entry levels. Therefore, potential losses would not be so painful for us. Therefore, letting us wait for the accurate trade when we have bigger gains to take on. So that would be it for this strategy. Let me know what you think of it. If you have previously came across this strategy and you maybe test it out, I will also share a backtest later on the other social media like Instagram and TikTok. So be sure to follow LiteFinance over there too. And yeah. Thank you for watching, and until next time, guys, take care, bye.